By PL Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Stuti Beria from PL Capital. Thank you, and over to you, ma'am.
Thank you. On behalf of PL Capital, I welcome you all to the 2Q FY26 earnings call of S-Chan Limited. We have with us the management represented by Mr. Himanshu Gupta, MD, Mr. Saurabh Mittal, CFO, and Mr. Adil Sodi, Head Investor Relations, Strategy and M&A. I would now like to hand over the call to the management for opening remarks, after which we can open the floor for Q&A. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. I am Himanshu Gupta, the Managing Director of S-Chan Company Limited. I would like to welcome you all to our second quarter results conference call for FY26, and thank you all for taking the time out and joining us here today. Quarter 2 FY26 was a steady quarter for the school and higher education segments in terms of sales on a YOY basis. Do note that the second quarter is the smallest quarter in terms of revenues in the whole year. As guided in quarter 1, there was a shift in the content licensing AI datasets revenue from quarter 1 to quarter 2, which led to increased billing in that segment during quarter 2 versus last year. We continued our journey of improvement in terms of delivering one of the lowest working capital matrix for Q2 in the company's history. We remain net debt free at the end of the quarter with a net cash balance of rupees 235 million versus net cash of rupees 93 million in quarter 2 FY25. On the K-12 business front, I'm happy to share that the PDF versions of the new NCERT books have been released and available for class 4th, 5th, 7th and 8th on the NCERT website. We would wait and watch for its physical availability in the market. We expect the full adoption of the new syllabus books for classes K to 12 by FY27 and are fully equipped to utilize this opportunity over the next 2 sales seasons. We have entered multiple partnerships for content and licensing, including allied books for ICSE books, Discovery, Amachit Katha, Money Prep for financial literacy, Speed Labs for JEE and any NEET Foundation, and etc. These various initiatives will help us expand our catalog offering to schools. The digital initiatives Smart Key and Test Coach continue to move forward with higher adoptions and enrollments. Our industry companies also continue to improve and both are profitable in H1 and continue to build and grow the businesses. With that, I would now request our CFO, Mr. Saurabh Mittal, to apprise us all on the financial performance of the S-Chan.
Thank you, sir. Good afternoon, everyone, and thank you for your time. I am Saurabh Mittal, Group CFO of S-Chan Company Limited. Now coming to the numbers, during Q2 FY26, we delivered consolidated revenues of 493 million, up 32% YOY. There was an EBITDA loss of 601 million and a PAT loss of 536 million. We saw a reduction in the gross margin percentage during first half due to the change in the content licensing revenues versus H1 of FY25. The pricing in the AI datasets in H1 has resulted in H1 FY25 has resulted in higher gross margin versus H1 FY26, where pricing was lower, but volumes improved. On an absolute basis, we delivered content licensing AI datasets revenue of 142 million during H1 FY26 versus 160 million in H1 FY25. The AI datasets business is evolving and the deal timings may vary quarter to quarter. We are working towards making this a steady business through various initiatives and increasing the number of customers to 4 versus 2 in the previous period. With the AI LLMs evolving, the need to train the LLMs on quality, verified, researched and copyright data will continue in the near future. Our large repository of text, illustrations, images, videos, question banks and audio data is in multiple languages will hold us in good stead. One of the strongest features of Q2 FY26 is our continuous focus on working capital metrics, receivable days, inventory days and net working capital days. All of these efforts resulted in S-Chan Group becoming net debt free with a net cash balance of 235 million versus 93 million in the previous quarter. Do keep in mind that this cash balance is in spite of the dividend payment of 141 million in first half itself as compared to 105 million, which was paid in Q3 of last year. With this, we are on track to be net debt free for 3 quarters in FY26 as well. I would like to bring your attention to slide number 7 and 8, which showcases the results of steps taken during the last 5 years towards building a cost-effective and lower working capital organization with focus on positive cash flows. I would also like to highlight slides 20 to 25 in our investor presentation, where we have compared S-Chan on various parameters with leading pan-India publishers. This benchmarking exercise on parameters like EBITDA margins, PAT, receivable days and operating cash flows showcases our position versus the industry for the benefit of our analyst and investor community. This would also help you in understanding how we are placed within the industry. We've been successful in finding the right balance between revenue growth and maintaining an efficient level of working capital. This helps us generate cash flows to be used in investments, acquisitions and capex. With this, I would like to open the call for questions. Thank you.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Nitin from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes.
Yes, sir.
Okay. Sir, you mentioned last time that we are looking for some acquisitions for inorganic growth. So is there any progress on that front? And if we have, are looking for companies, what kind of profile the company will be and which geography or board we are considering? If you can elaborate more on that.
Yeah, hi. So, yes, we've finalized one acquisition, which is in the international curriculum space. I can't share anything beyond that, but this should be completed in Q3.
Okay. Any idea about the amount, quantum of that will be spending for this acquisition, and how will we source? Will it be through internal approval, or are we going for some debt also?
It's not very large, to be honest, because international curriculum we are doing for the first time, and it's almost around 1.5 million.
1.5 to 1.7. $1
1.5 million, and
around 10 to 15
we might do
crores.
some part of it as debt, although we have cash, but foreign currency debt is always easier. So.
Okay. And my second question is about the NCF, as Himanshu sir mentioned about the books are available now on NCERT in the digital form. So what kind of impact will it have on our revenue stream? And is there any change in the guidance that we are having either side? So if you can elaborate that.
The guidance remains the same as we had said earlier, and physical availability of books is still not there, and we are waiting for it. And now after this, more or less the curriculum will be complete of NCERT after the release of these books physically. And we expect that then the market will definitely look forward to get, because right now the market is confused because NCERT has released their books in a piecemeal basis, not in the full stack basis. So this time after doing this, the market I think would be not that confused as well last year. So they will know that now the new syllabus has come out and the physical NCERT books is also out. So market would be clear in that regard.
Okay. So our the revenue and EBITDA guidance remains the same as of for now.
Yes.
Yes.
Okay. And my third question is about the raw material pricing. How do you see that, where it is heading, and will there be any impact on our expenses ahead? when we are, doing heavy lifting towards towards the end of third quarter and fourth quarter?
So raw material remains largely same only. There's not much of, I would say, difference. The price is a little lower only than last year. So we are, I would say, lower by 5% or below that. But there's a GST impact because the GST on paper was earlier 12% and now it's become 18%. So the price softening of the impact has been covered by the GST now, so there will be no positive impact on lower pricing. It's 18% now GST.
Okay. 18% GST.
Yeah, before it was 12%.
In case I have any... Yes. Sorry.
Before it was 12%, now it's 18%.
Got it, sir. Okay. In case I have any additional question, I'll come back.
Sure. Thanks, Nitin.
Okay.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mr. Praneeth, an individual investor. Please go ahead.
Yeah. Hi, Manik. Thank you for the opportunity and robust performance. So I was wondering in terms of understanding the licensing arrangement, so we do content licensing. Could you explain the structure on how you build this? Because as far as I understand it, licensing, you call it a lumpy business. Could you explain why is it lumpy?
Yeah, because these are deals that happen at different points of time. Okay, it depends upon the customer's requirement. So between various customers, the requirement keeps changing, and the content, of course, set also keeps changing. And these are some of them are perpetual deals, some of them are period deals. So that keeps changing. So it's a new business, and of course there is no quarter to quarter trajectory as of now.
Understood. So what percentage of the overall deals would be perpetual versus limited duration?
So for last year, I would say it was 50-50, but this year it's gone to 25 being renewal ones and 75 being perpetual. Understood.
And you also mentioned that gross margin impact because of you licensing you expanded just beyond your own content to other third parties licensing that content also.
Yeah.
Could you explain what's the business model strategy behind that?
Strategy is simple here. I mean, if a customer has a requirement and he wants us to arrange for that, so we become the single source for them to get content. So if they want something in a single language, no single publisher would have that much of content. So we go out and source from multiple sources and provide them as a one-stop solution. So that's where it is. Of course, since we have to pass substantial percentage of it down the line, so there of course our margins would be lower on third-party content.
Would you actually number difference between, let's say, your own content gross margin versus for licensing specifically versus a third party?
So I'm sorry, I can't share that on a call.
Understood. Got it. And in terms of the viability, sustainability of the licensing business over long term, what are your remarks on that? Because you also mentioned the aspect of limited time deals also, right? Could you explain how might it work going in 4 years down the line? Will these players stop licensing, or will there be a perpetual use for this license?
So that's like asking me how relevant would AI be 4 years down the line. I think nobody can answer that question as of now. But what we have understood is that the models continue to involve the kind of data that is required. So the requirement continues to change. So what we licensed probably last year was more of STEM. This year is more on languages, probably text. Your images will be more important. Maybe videos become more relevant at some point of time. So that the models are continuing to evolve. So and between different technology companies, it continues to change in what specialization they are looking at for their own models. So I think there is a trajectory there, and of course we are looking at now improving our data sets, making them more relevant so that the models can be trained better. So we are also investing in upgrading our data sets to finer data sets also. So that's a different thing that we are doing. It doesn't require too much of expenditure, but we have to move to the next level. And there would be a lot of customers that we've not reached out to so far. So to reach out to them, of course, we need a different level of data.
Understood. And in terms of client concentration, how many clients do you have for this particular business unit?
Last year we had 2, this year we've got 4, and we're speaking to the 5th one also.
Understood. Got it. So, and regarding the the growth rate of this particular business, we had high growth rates that we expected. So will we expect to continue on the same level for the next year, or could you give some more clarity on that?
So last year we did about 19.5 crore. This year we're looking at about 25 as of now. So that's where we stand. I mean, this number could go anywhere. One single deal is about $1 million. So I mean, it can really change. The 25 can become 35 at any point of time. So we continue to having conversations, but of course, once you sign on the dotted line is only when you confirm it.
Understood. And one more thing, and you also mentioned your competitor financials on the presentation, right? So I was wondering, in terms of PAT margin, your competitor one has significantly higher profitability margins compared to S-Chan. I was wondering, why is that the case?
So we would not be able to comment on other players' margins. This is just a reference point. You can see out of the 7 players mentioned, only one has higher, I think, margins. Rest of the others are below. But we would, I mean, it's a different company. We don't have access to their internals.
See, the product mix, of course, depends upon the product mix, what segment, the size of that business, and whether they are growing or not. So I think growth rate in that, so again, depends upon a lot of things.
So you won't be able to comment specifically what could be happening to higher margins?
Yeah, so I mean, I think as a listed entity, we slightly have some higher costs, to be honest. Again, location also of where the business is also impacts the costs. So lots of factors, I would say. I mean, one-to-one comparison may not be there, maybe, and plus, of course, we do have higher education with slightly a lower margin business as compared to. So again, product mix would differentiate that. Although we strive for a higher margin.
So got it. So in terms of the future growth forward, what do you expect to change? Any substantial like growth metrics with the changing dynamics? Because seriously you mentioned that it's coming after a long delay. So for the next 3 years guidance, when do you expect, what kind of growth do you expect in your publishing division?
Yeah, to be honest, we are focusing more on making this more sustainable and cash generating than just revenue growth, right? That's something that is really done well for us in the last 5 years. We've been able to generate almost 100 crores of operating cash flows over the last 5 years. I mean, if you look at the industry, I mean, you put in the 10 players all together, consolidated, they've not been able to generate so much of money. So I think our strategy continues to be conservative growth, but not very aggressive growth. So I mean, we will not push too much to ensure that we are only growing revenues and not the bottom line. Our focus is to ensure bottom line and cash flows are important.
Understood. So do we expect 100 crore mark to be on steady state going forward?
Sorry?
So can we?
So we don't give a guidance on.
Mark?
We don't give a guidance on OCF.
Yeah, I mean, 100 crores OCF is something that we continue to strive for.
That is something what we have done successfully in the past couple of years as well. But to give it as a guidance, I don't think will be appropriate at this point of time.
So what could be the factors that could affect the OCF going forward?
No, I don't think so. I mean,
that you see at this type of substantial?
No, I don't see that challenge. I think that number should continue to be there.
Understood. Thank you so much for your answers. I'll get back in the queue.
Thank you.
Thank you. A reminder for all participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. I repeat, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mr. Divakar Rana from Prudent Equity. Please go ahead, sir.
Yeah. Hello, sir. Sir, a few months back, you have hired off one manufacturing unit into our step-down subsidiary. So what was the rationale behind this?
So that we could segregate the margins for the publishing business and the printing business separately. And second, of course, there is a GST arbitrage there.
So can you basically let us know the benefit of the GST, maybe in the tax saving?
So I think initially it's about 4.5 crores and on an ongoing basis around 3 crores per year.
3 crores. Okay. There's one question on the digital books that has been published by NCRT. I just want to confirm, if you have started the printing of new books according to that digital formats.
Yeah, that's an ongoing process.
Okay. So, let's say we all know, the adoption has been delayed. So, NCRT is coming out very slowly and gradually only. So, let's say, the new books, the hard copy of the books come in maybe March and April month of 2026. So, I just want to understand, will you print the books in that month also? Maybe, let's say, if the NCRT is printing the books and accordingly you are publishing your own books.
So we publish our books. Our catalog has already gone out in October, so I don't think so. Last moment, in case there is any requirement, we can always do that. We have an in-house printing press. So that's not a really challenge for us. So any requirement that comes in from schools for content, because our content is already aligned to that. So in case there is a requirement, we can always print and publish, and so that's not really a challenge. Okay. And sir, last financial year, can you just remind us how many standard was this NCF was fully adopted? I think 3 it was the standard, 3rd and 4th class. Just want to confirm.
No, it was only till 3rd and 1st, 2nd, 3rd and 6th.
Fully adopted is fully adopted. Yes. For one up to class 2, 3 is still easier to say.
Yeah.
Class 6 and on a standalone basis, I don't think so. Adoption really happens, because then it happens as a group of 3 classes. So that.
So this year probably you will see adoption of 4th, 4th, 5th, 6th, 7th, 8th of the new syllabus books.
Okay. I think till now 3rd and 6th is done. 3rd and 6th standard.
3rd and 6th.
So I would like to just ask yes.
1st, 2nd, and 3rd and 6th.
Yes. Okay. So are we getting any benefit of this in this March quarter, last quarter? Or
We feel the benefit will come in when the full adoption happens, no? Then the benefit should kick in. Right now, the adoption has been staggered over a period of 2 to 3 years. So the full benefit is not coming in.
Okay. Thank you.
Yeah. Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. I repeat, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Mr. Praneet, an individual investor. Please go ahead, sir.
Yeah, thank you for getting me back with you. So I was curious about the status of our investee companies, Smartivity and Exampi. So what is the strategy for a company for those particular companies?
Yeah, we are minority investor. We own about 15% in Smartivity and I think 3 or 4% in Exampi. So So on the strategy, I'm sure.
Do we have plans of divestment or something like that?
Not in the near future yet. Not in the near future. Not for the next 2 years. Unless there is a liquidity event, not really. I don't see that in the next 2 years.
Understood. And so you also mentioned about acquisitions in the previous participant. I was curious, does the company plan on acquiring a lot more in the same space also, because you mentioned you wanted to acquire an international curriculum to make a foot in there.
Yeah.
But what about CBSE? So do you expect to acquire
CBSE?
more in CBSE and other places?
Acquisition CBSE space, you see.
Yes, CBSE, I think our catalog is full.
Yeah, we almost have a full catalog. There's not much of gaps. So basically, what we're trying to do, Puneet, is like trying to fill in the gaps, because see what happens is, like IGCSE or IB space, we don't have any much books, and we don't have a brand in that segment for international schools. That's why we want to look at acquiring somebody. And CBSE, we already have a good brand, and the product portfolio is almost full. So there's not much there which is there to acquire. But if there is something interesting at a good valuation, then we might look at. But as of now, we don't think anything right now.
Understood. So could you also list out the gaps you see at this point of time in your portfolio? Yes.
Those are very, I can't, it's a very longish discussion, and, that's a very technical discussion. But we have some gaps in, I would say, like international curriculum we mentioned. We have some gaps in, I would say, school regional segments. We have some gaps in, I would say, non-core textbook area, which is like supplementary books area, test prep area. So we have gaps in computer sciences. We have gaps in 4-5 areas, 6 areas. So as and when the opportunity comes in and the price looks decent, then we might look at acquiring. We have spoken to a couple of other companies, but the deals didn't go through for some reason or the other reason. But if we find any good opportunities, we might be able to fill these gaps.
Understood. Thank you.
Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Ms. Stuti from PL Capital. Please go ahead, ma'am.
Hello, am I audible?
Yes.
Yes, you are.
Thank you for the opportunity. I wanted to ask, sir, could you throw some color on how the acquisition in IB syllabus would help us?
So they are about 1,000 plus international curriculum schools in India.
They're growing at a very fast rate.
And growing pretty fast. And currently we have no
Products.
No products for that. So that plus of course we have good relationships in Middle East plus
Southeast Asian countries.
South Asian countries, Sri Lanka and whole of South Asia. There are a lot of these IB and IGCSE schools. So once we get a hold of content in that segment, which has been of course a good brand, then that would help us expand in that segment.
That opens a new vertical for us, which currently we are not addressing.
Got it, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Mr. Pankaj, an individual investor. Please go ahead.
Yes, good afternoon. My question is with respect to the new education policy discussion that has been happening for the last 3 years and the change in syllabus or curriculum. How are they going to impact the sales and profitability of SCHAN in next 1 year or 2 years?
So I was just mentioning earlier on the call that basically the NCERT curriculum is being launched in a very staggered manner, and the full curriculum will be launched by this year end, and then we will be able to get the full results of the NCERT curriculum benefits. So the books were not released in a full stack basis; they were released in a piecemeal basis. So it got staggered, and that delay basically confused the schools, and we were not able to get this amount of growth of benefits that could have come in. But now, after the release of these books, we might see a better benefits in the coming years.
So do we see the benefit in coming session of the schools from this, or will this get deferred to 2027 let's?
So this year we might get some benefits, but we feel that full benefits will start coming in from next year onwards.
And if that doesn't happen, is our growth trajectory on path, or will have a stagnant march compared to last year?
No, so we have already given our guidance and we stick to it. There is no change in the guidance.
That's it. And if the new education policy changes the curriculum, then approximately how much of the benefit share we will be able to take compared to other companies? Because there are regional players also strong in NCERT curriculum.
Regional players are basically more stronger, we would say, in the state board curriculum, and central players who are based mostly in Delhi NCR area are, I would say, major players in the CBSE area. So we will also take the benefit, and others will also try to take the benefit as much as possible. We being a better brand and a better content and a better service-oriented company, I think we should get a better share than the others. But what percentage it will be, what will not will be, it's difficult to say as of now.
Understood. And my last question on your some of the benefits we were able to see as a green shoot in digital platforms, where we saw some of the growth in the last few quarters. So, is the trajectory continue, or the pie is very small compared to the overall business?
The pie is small in terms of revenue, but the margins are quite decent. So, margin point of view and cash flow point of view, it's a good business. But the revenue point of view, it's a smaller business. And it's a very on and off business. So, it's not a business that we can project how much revenue we will get in this year or next year. So, basically, it is not that clear, you know. Companies want content, we are ready to provide them. If they don't want it tomorrow or they defer it, then it's not on our hands.
Thank you so much, sir.
Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We'll wait for a moment while the question queue assembles. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
So thank you everyone for taking out your time, and be safe, and thank you for this call. See you soon. Thank you.
Thank you.
Thank you, sir. On behalf of PL Capital, that concludes this conference.